Recording in
Okay, so
progress.
this white color is referring to what the market say about the interest rate. So when it's going down means that the market say, okay, now the interest rate is going to drop. And this line means that what the Fed say, the interest rate will not move. And so when the Fed keep on saying that, I'm not going to cut the interest rate so fast, the market say, no, 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 you're lying, right? Until beginning of this year, market come to realization, then they come back. So if you recall, if you're FI member or you're my client, you remember I say this word during our webinar, don't Fed the Fed. Okay, this is the golden rule in our financial professionals. Okay, remember this one, tap into the chat box. Don't Fed the Fed. A lot of people think that they are smarter, when Fed say like that, I don't believe him. I think he mispriced. Don't Fed them because they are the one who write the rules. Okay, you never challenge a person who write the rule. Like say if you go to the casino, why you always lose? Because casino determine the rules. You are just a player. Right? The game master determine the rules. So always play along with the game master. Don't bet against the game master. Okay, and so let me explain to you why the Fed don't need to cut the rate. Okay, don't need and enable to cut. Okay, the first of all is that because the world has come to a stage that everybody have lost a lot of confidence to the dollar and the US treasuries, the US bonds. And everybody is trying to seek for alternative. That is called the de-dollarization. I'm not so sure if you heard of this word. If type into the chat box, okay? It's called de-dollarization. This thing has been going on for many, many years because everybody know as long as they buy US treasuries, as long as um, they hold dollars, they are going to be like puppet of the US, right? As a central government, you have not much say about your own monetary policies. And this thing has been going on for many years. Of course, China was the most promising candidate to replace that, but they failed to do that because of certain structural and the political reasons. But the truth is that China is still quite strong in their own financial markets, and that caused a lot of threat, I'll say threat lah, to the US because people are seeking for alternatives. So in order for people to buy US Treasury bill, what do? Because China is dumping, Russia is dumping, a lot of people nowadays, even my client, they always ask me, is it safe to still hold US Treasuries? And but how do they do it? So they just increase the interest rate, so make it a lot more attractive, right? Imagine like Singapore dollar now they pay you 5% interest, then all the money will flow to Singapore dollar. So interest rate is the price of the currency, right? So that is a game they have to play because if the treasury is paying a too low interest, they cannot sell so many treasuries. When they cannot sell that debt, right, they cannot finance their fiscal policies. That means we all know the US is printing money, but how many know what is printing money mean? Printing money actually is not to say physically print money. Okay? In the practical way, printing money means issuing more debts. That is how financial market works. You cannot say I really, like people say, I open my printer, I just print. It doesn't work that way. You need to back by something, which is the debt. Right. Later I'll talk a little bit about the debt. Okay. So, but just remember that is one of the reasons. Secondly, is that when everybody is hurt by the high interest rate nowadays, let's say if you have a mortgage in Singapore, right? You are a lot hurt by the mortgage, like high mortgage. Maybe you pay, I don't know. Now it's a little bit lower. Like last year, a lot of people pay 4%, 5% kind of interest rate for their mortgage. So what's the reason? The reason is because um, our mortgage is already short term. If you take a loan, if you understand how the loan works, is that 2 to 3 years you lock in. After that you refinance, or even if you want to lock in for longer, the bank does not want to do so. But that does not work for the US people. US people, when they have a mortgage interest, it's straight away 30 years. That means the interest rate they will straight away lock in for 30 years. Let's say someone bought a house like 20 what they, or okay, during the COVID, let's say zero, right? Maybe 1 or 2% interest, right? They will lock in the interest rate for 30 years. And then it doesn't affect them when the Fed raise the interest rate. So if this chart is trying to show you that how much of the US mortgage is still at the low interest rate zone. Okay, so below these numbers are the interest. Okay, of course, some people, they buy new house, they take a new loan, they have to pay 7-8% interest. That was in the headline, right? Wow, the headline say, wow, the US interest rate is so high, people are suffering from the mortgage. The reality is, most of the US people are not suffering. It's only the rest of the world is suffering. So it does not affect their what election, because if the voters are affected, then the election got problem. That's why they need to adjust the monetary policy, because does not affect the voters. So they don't need to worry about that. So they can continue to have a high interest, whereas other countries are suffering. Right? So if you understand this one, you type maybe low interest into the chat box, right? So understand this part. So there's two things. One is, first of all, they need to have a high interest in order to sell their treasury bills. Nowadays, even I get some of my clients to buy the US treasury bills, 5% interest, free money, right? 5%. No need to do anything, no risk. Okay. Why I say no risk, by the way? A lot of people say, hey, US don't know whether they can pay the debt or not. Hey, the US president himself said, Ronald Reagan said, right, I'm not worried about the deficit. It's big enough to take care of itself. Okay, think about it. Think about it. I'm not worried about the deficit. It's big enough to take care of itself. That means they never intend to pay it off in the first place, and they know the world cannot force them to pay, because it's so big that if they don't pay, everybody suffers. So, think about it. And this chart, okay, so why did I talk about this one? Because I want to give you some backdrop about where we are today. So do you think that today's rate is high, or do you think today's rate is low? Then we need to look at historically. Because if you're talking to someone who only, understand the interest rate thing in the past, maybe like 5-10 years, they may think we are very high now, right? But if you look at the history in the long run, so this line is the interest rate, okay? From 1983 until almost like 2021, okay? It has been a downtrend for 40 years, for good 40 years, right? And how long do you think the interest rate will go back to the previous level? Of course, they will not say, it's unlikely to go like that. But then I'm saying that how long can they still stay in this zone? That is a question mark. That's a question mark, right? Of course, it depends on a lot of things. And I just want to put a number into a perspective about how does it work. So, of course, in the interest rate climbing, then it's bad for bonds and equities. In this kind of thing, then it's good for lenders. That's why, in most people's memory, I go back to the thing about monetary policy. In most people's memory, in your memory, property has always been rising up or down. Tap up, if you remember, it's up. Tap down, if you remember, it's down. In your memory, property has always been up, because the interest have gone down for 40 years. 40 years. And how many of you have been invest in something more than 40 years? You don't, right? So my point is this. This is I call the structural trend. It's called the structural trend. Structural trend means that it's a big trend which lasts for very long. And for those people who believe in properties, I can't say it doesn't work. But China have shown us, Japan have shown us that property price doesn't always go up. Do you agree? Property price doesn't always go up. It's only for the particular period due to certain either geographical or demographical factors, or because of monetary policies. So in the past 40 years, because of the low interest rate going down, and because of baby boomers, because people are giving birth, before 2000, and all those are the real factors that will push the property price up globally. But everything will come to an end when the fundamental factor change. So this is some food for thoughts. If you think that for the next, let's say if you are retirees, you think, oh no, you should just buy a property, it's a safest investment for the next 10, 20 years. You need to think twice. Because if the interest rate don't have to raise, just say stay at this level for 10 years, how much would it affect the property market? Just think about Singapore REITs. Singapore REITs has been down 25% since the COVID level still. It's still at a COVID level. And then we have been all opened up already, right? Just because of interest rate, how much the real estate investment trusts have hurt, all the property, commercial property have been hurt. And that has not been translated to the residential property yet because of course, government policies and some, they need to stabilize the market. They have some factors. But then in the long run, you think about it. Okay? So what happened if the rate cuts, right? Okay, if the rate cuts. When the rate cuts, on average, it looks good. On average, it's good. So average, everything also go up. So this is called the stock market, bond market, and the cash. Everything also make money, right? Whether you have recession or no recession after the rate cut. So if you read financial news, if you read, like online bloggers, they talk about the impact of a rate cut. They normally will show something like this, because this is for them to sell you a product. So typically they will say, it's good time to buy everything, because everything else go up. When the rate cut, we just wait for it to happen. Okay, but in reality, right, average doesn't tell the whole stories. We need to understand average, like 3 plus 3 and a minus 1 on average is still plus 1. All right? Understand this part? Yeah. So if let's say 1 year return is 3%, 1 year return is minus 1%, on average you're still plus 1%. So average does not tell the whole story. So what is really happening is historically, there's still two paths. Even with a rate cut, the market can go up, can also go down. So I'm trying to explain to you, don't be too optimistic. Of course, you don't need to be too pessimistic. It's not guaranteed lose money or guarantee make money. It's just that you need to understand the probabilities. Investing ultimately is a matter of probabilities, because there's nothing is for sure. There's nothing is for sure. But there's something have a higher probability, then we try to play along. That's called a trend, right? But trend can change when things change as well. Okay. By the way, the 2 times after rate cut, there are 2 times with significant market drawdown after rate cut. One is under the dot-com bubble, one is under the global financial crisis, which is 20 years ago and 10 years ago. So how the market will react this time, we don't know yet. So that's why I keep on saying you need to be adaptive. Don't need to be predicting whether they'll go up or down, but when the things happens, you need to pay quite a lot of attention to it. Okay, so much about the monetary policy front for the coming few months. And I'll talk a little bit about technology advancements. So remember, what are the 3 things we look at? One is monetary policy, second is technology advancement, the third is the geopolitics. Okay, of course, monetary policy is medium term, technology advancement normally is long term, and geopolitics is normally short term. Okay, so now everybody is talking about AI, but how many people really understand AI? Everybody is become a AI experts on the YouTube, on the TikTok. Wow, everybody say AI can do this, can do that. There's this website can help you to pick stocks. That the website can do this and that. Okay, so I graduate from a computing background. I started to do programming since I was 10 years old, and I do understand computing a little bit. And this is this guy, not this guy. This is my professor, NUS professor, Prof. Leong. And this is the post he posted just a few days ago. Happy birthday to Prof. Leong. He say, this is my birthday, and my occupational hazard tell me I'm 1 million 101 years young today. Anyone understand what does this mean? Anyone understand what does this mean? Do you want to know? If you want to know, type 1 into the chat. Oh, binary, Kokshin. Oh, Kokshin, are you a computing person? Wow, Marcus also. Wow, good. Yeah. So there are only 10 type of people in the world. Those who understand binary and those who don't understand. Who understand type 1, don't understand type 0 into the chat box. Okay, basically, computing, all the computer we use, actually they only have 1 and 0. Maybe you heard about it. Basically, only 1 and 0. And everything we have seen is a combination of different 1 and zeros. Okay, I won't go to the technical details, but you probably, sometimes you see the matrix or, hiker stuff, there are a lot of 0, 1 going around because everything is, we have seen all the letters, all the numbers we have seen is formed by 1 and 0. So basically, 1, 0 means 2, okay, in the computing language. Okay, wow, Marcus, you're so fast, 69, yes. So this one means 69 from the binary word to the decimal word. Okay, good. Yeah. So okay, what's my point? What's my point about this one? Is that AI and IT or computing, how you call it, is something seems to be very seems to be seem you have understanding it, but sometimes you don't really understand it. The devil is always in the details. Okay, so of course, I probably understand AI a little bit more than if you are not a IT person. Okay, but there's always a confusion about people. That's why Bitcoin is a very interesting concept. Why people are so fascinated about Bitcoin? Why people are so excited about Bitcoin? Because there's this saying, right? Bitcoin combine the most confusing two subjects together. One is called computing. The other is called the finance. Because Bitcoin combine computing and the finance, which is the most two confusing subjects into one product. That's why there's so much misinformation about Bitcoin, so much misunderstanding about this thing. Because in order for you to understand Bitcoin, you need to understand computing. You also need to understand finance. So that is a challenging part. Yeah. So a lot of people, they seem to know, but I can assure you they don't really know what is happening. Okay, so let's go back to the topic about AI. Okay, my first encounter about AI is when I was very, very young, uh, Chinese, they like to 算命, right? And I saw, but not like this. This is still like have a computer. That time I remember I was in one of the shopping center. I saw there's this machine and some buttons, this and that. It's like a huge machine. That time I don't even have laptop yet. But I just give you the idea, like, the machine says AI 算命, right? Artificial intelligence fortune teller. Sounds very powerful, right? Of course, uh, it's just like one of the scam, right? So by using the name of AI, you can create a lot of things that the people don't really understand. But is AI a fact or is it the future? I actually conducted a seminar last year when ChatGPT was just launched. I conducted a training about ChatGPTs. In my opinion, I believe AI is a revolutionary thing for the future. Okay? I believe AI is a revolutionary. It's just like one of the industry revolution, like how electricity was invented, because they add the oil and for the whole world. Yeah. So the whole human, okay, basically how human advance, if you can understand finance, if you understand a little bit about economy, right? How human advance is improve of productivities. It's an improvement of productivities. That means if you understand why we are so advanced nowadays comparing to, let's say, 100 years ago or 200 years ago.
Well, 100 years. Okay, right? But, okay, if you...
Mute, please. Thank you. Okay, so it's about how fast we can do things. Last time when you send person a mail, you write letters, you put in the envelope, you put a stamp, the person get it like 4 days later. And if you pay extra money, you can get the person receive in 1 or 2 days. But nowadays, email is instant, right? So that is improve of our human productivities. And our human productivities have been challenged multiple times in the centuries to increase. And now if you think about AI unlocks so much productivities. Like nowadays, when I even when I write articles, right, with the help of AI, I can check my grammars, I can improve my language at a very fast speed. Last time I probably spent like 5 to 6 hours to write an article. Nowadays, I probably can spend 1 or 2 hours, I can write an article already. So that is the kind of speed. When I want to check some things, I can use ChatGPT or Google's Gemini. By the way, Gemini is very good. I find it's somehow better than ChatGPT in today. So you can try Gemini, right? Very powerful. And all these things is improve our productivities. And we are just at the beginning of this thing because why? Because we haven't even started to do the application yet. Everything was still under the development of this thing. So if you ask me, I believe it's a very fundamental change. I call it a structural change. Okay, of course, this is a long story. Maybe I'll just go back to this one. So I showed this chart in the previous webinar. I talk about how do we invest in AI and how do we invest with AI. Okay. Of course, now I draw this line say that you need to invest from the infrastructure to AI applications to enablers. Why? Because only when you have an infrastructure, then you can do applications, then you can apply to different other industries. Correct or not? Because these industries may be promising, but because without the infrastructure, they are not enabled to do the AI things, right? They take time, right? Even like ChatGPT take time to evolve. Google take 1 year to catch up with ChatGPT, with Gemini. All these things take time. But the one who benefit first is all these infrastructures. So that time I talk about NVIDIA, Micron stocks, if you recall at the time, that was 1 year ago. Of course, now they have grown up, the share price have went up quite a lot already, right? And now maybe, I think we are almost finished this stage already. We are almost finished this stage already. And now we are looking uptrend. Okay. So this is something that you should be thinking about if you want to invest in the AI team. This is one of the picture I showed during the previous webinar, because I say, how do you invest in the infrastructure? Right? Basically, it's same as Gold Rush. So I talk about AI is same as a Gold Rush. Okay, so who made the most money in Gold Rush? Fireman members, if you remember, tap into the chat box. Or if you're not, you can guess who made the most money in the Gold Rush. There are 3 industries who made the most money. But none of them is the gold diggers. So all these people, they don't really make money. Oh God. Okay. Okay, the first man is Samuel Brennan. Okay. Samuel Brennan is the one who said, the equipment, the, what do you call, shovel, pick and pan. Shovel, pick and pan. Right. So he sell the equipment, which is infrastructure, right? NVIDIA sell the chips. Okay. Levi's. This is where our Levi's jeans come about. Do you know? This is how Levi's become famous, because the people who work in the gold mine, they need to, the people who work in the gold mine, they need to have a very 耐用, kind of pants, right? So that's why Levi's use this kind of jeans to help people, and he sell a lot. The last one is, who is this guy? Spencer Morgan. Okay, it's JP Morgan. So everybody know about JP Morgan today because the guys, this is where JP Morgan started, right? Like hundreds of years ago, because they provide financing for people who want to go to dig the gold. So this is the infrastructures for the gold. And for the AI, of course, you have infrastructure, you need to have a data center, you need to have the chips, you need to have the fundamental systems, language, whatever, which is already, I think, the opportunity is so-called reduced in past 1 year because the price have gone up so much. So now when you want to invest in AI story, looking up layers, okay, you still have a long way to go. Okay. So definitely I still believe in AI, but it just how you invest it is a little bit different story. And how you invest with AI. This is a thing also that I want you to think about as well. Because with ChatGPT, with Google, actually everything has answer. Although sometimes the answer may not be correct. So, AI's answer, I call it sometimes correct, but always confident. That means if you ask AI a stupid question, AI will give you a stupid answer and it sounds like a very good answer. And that is the skill that we need to have today to ask the right questions. You must know how to verify whether the question is correct, whether the answer to your question is correct. So this is a skill that we need to equip ourselves and probably our next generation as well. So instead of learning to answer questions, we need to learn how to ask questions into this context. That's in the AI world, they call the prompt. Okay, so now there's new occupation called prompt specialist. Yeah, but this is something that the food for thoughts. Okay, so much about technology advancements. Anything you can type into the chat box. The next thing I want to talk about is geopolitics, which is affecting us in a very close future. So just now, AI is a very long-term structural thing. I think it's years to come. Along the way, there will be multiple opportunities. Monetary policy, it will be like 1 or 2 years time, they probably will change. But in the next few months, we need to watch closely to the geopolitics. Okay, so I can't resist to put out this photo. Okay, the gold is flying, right? The gold is really have a historical high because of the geopolitical tensions. And what are the geopolitics are we talking about? Now we have three geopolitics, all related to the US. By the way, the US just passed a bill, the security, whatever bill it is, to supply billions of dollars to Ukraine, to Israel, to Taiwan, right? So these three places you know already. So these three places are going to be the hotspot for the next year. And how this thing will work out, we have to see how China and Russia response, including Saudi Arabian. And nowadays, the Iran already start to do some funny things. But I think deep in everybody's heart, nobody want to escalate. Okay? But sometimes things does not go according to the plan. Sometimes it's out of control. So safety first, safety first. That's why gold is going up. But interestingly, right, I share with my clients as well. This line is a gold price, but this line is a physical gold holdings for the underlying ETF. What does it show to us is that I believe is that because of the geopolitics, a lot of countries are demanding physical gold nowadays. They don't really believe in the security because anyway, the security is still in the US. And the people have a lot of distrust to the US credibilities. And this just an article that I saw just a couple of days ago. Okay, this Russian in Singapore was arrested, I believe. He bought $88 million of gold, physical gold in Singapore, right? And was charged, say, money laundering for invasion of Ukraine, whatever it is. But my point is that in such kind of world, sometimes the big guys like government, central government, or big organizations, they are storing physical gold. Okay. And where do we see the opportunity if we see that? Because as a layman, right, like us, right, how much gold? Can you buy a $88 million worth of gold? You probably buy a gold bar, like, worth 100,000, 200,000, but what's the point, right? Okay, so where is the real opportunity comes? I think the real opportunity comes for the gold miners. Okay, that is opportunity I'm looking at now. Actually, I already talked about it for the past few months. I bought the gold miner stock for my clients, and I think that is the opportunity we are looking at. By the way, all these are not financial advice. Okay, just for your educational purpose. And this is the gold miner stock, and this is gold price. So typically, when the gold price go up, maybe the gold miner stocks will also go up because they have more profit margins. But for some reason, there's a gap. And if we assume more people are demanding physical golds, that means the one who dig the gold probably can make more money. So just a thought for that. Bitcoin also is interesting, but it's not to advise to buy Bitcoin. I just say the attribution of Bitcoin has changed a lot. Bitcoin from a speculative instruments are probably become a storage of value instruments in today's context. Of course, when that things happen, they also means actually the future returns is not necessary to be good. Because if you look at the gold price does not go like, parabolically, exponentially over the years, right? So when it's speculative, normally you have more opportunity to make money. When it's stable, normally the investment returns is diminished. Okay. But of course, it's interesting, I said, to monitor, to look at the market sentiments, stuff like that. Okay, the last thing, because of the geopolitics, we need to look at China. And China is a very interesting economy because it's the second largest economy and it's completely decoupled from the US. It used to be a globalization, they are closer and closer until Donald Trump, they start to decouple. And then today, China and the US, they are running their own things. US market is historical high, China probably is almost historical low. But the point is this, the money always flow to where the opportunity is. Okay, the money always flow to where the opportunity is. If you look at the China stock market, this is for the past 20 years. And there is this line, which I believe in many Chinese mind, right, 3,000 is unbroken line. I'm not saying that they will just like shoot up from here, but it's not likely to go down much further. That means from a risk reward perspective, investing in China become safer nowadays, especially when something happened to the US. Our people think that US equity is too high. So this is an opportunity that people can also look at it as well. Yeah. And for your information, in case you don't know, okay, China market actually was doing better than the US for the past 2 months. This line is the S&P 500. This one is the Shanghai Composite Index. And you can see actually Shanghai Composite Index has been quietly outperforming the US markets, right? So pay attention to China's stock market. I'm not saying you should buy, but this is some interesting asset for you for diversification purpose. Okay. W won't ask any good investment opportunity in the AI besides NVIDIA and Microsoft. Actually, there are a lot of opportunities because, as I said, AI is electricity. You must think about AI as electricity. And AI is not a product itself. It's an electricity. When you have electricity, you can produce a lot of things. You can produce computer, you can produce light bulbs, you can produce electric cars. So it is how people will use these resources to develop other things. That's why I say you're moving up the ladder. If you look at opportunity, I would say, the electricity, you think about electricity today is what PUB, right? PUB, does PUB make money? Yes, maybe PUB does make money, but how much money can PUB make? And the people who use the electricity, the people who use the water, they probably have other products. So we need to look at for the innovations. Later we'll talk about how I think you should invest in AI. Okay, let me just summarize about market outlook. And so basically, monetary wise, I think I mentioned about interest rate cut. People are not so optimistic nowadays. I think the Magnificent Seven, the US big tech stocks, probably have been overrun, which actually already seen. There's some corrections already, correct about 5-6%, dragged down by the technology stocks. I think Nvidia down about 10% or something. So this is opportunity looking for value rotations. Technology-wise, I believe AI is a structural trend. Watch out for application and the enablers if you want to do a stock picking. Okay, but if you ask me, I would say the best use is broad-based investing. Broad-based investing means you utilize the ETF or funds. Why do I say so? Because, just think about just now I talked about Yahoo, right? If in 2000, Yahoo is probably one of the most promising companies. And what is the other one? Maybe Amazon, also one of the most promising companies. But Amazon today have made a lot of money, but Yahoo is go under already. So when you bet on one company or one sector in particularly, sometimes you don't know how will happen to this particular company, or even in a particular sub-niche industry. And about broad-based wise, technology have been doing very well for the past 20 years. So broad-based investing will be safer and more beneficial for most people. Yeah. So that is how my advice to you. And for geopolitical tensions, I think gold and commodities, oil price, pay attention to. And bonds now is under pressure because of the high interest rate. But do remember when geopolitics happens, bonds will become a safe haven. So I would still believe bonds have opportunities. Probably it's a good chance to load up from bonds as well. Definitely when something really big happens, if there's an equity sell-off, bonds will come back to market favor as well. And China, maybe it seems to me that China have a better relationship nowadays. They're trying to manage. They are meeting a lot of people, right? The U.S. Blinken is going to China for a visit, right, this week or something. So I think they are trying to improve their image, and I think they are coming out from their previous so-called vicious cycle kind of thing. There's a chance that China may come back. So that is opportunity you should look for. Right. Okay. Any questions? Before I just highlight some of the strategies, you should look at it. Just now we're talking about the market outlook, but already I highlight some of the strategies. I will just briefly recap them. Okay. First of all, is that recognize geopolitics is always near us. Watch out for the impact of it. Okay. Hopefully nothing goes big. We can live a peaceful life in our lifetime. But if things go differently, we need to move our money around. Okay. I share this one with my clients and the FI members. This is from a Chinese drama called Fan Hua, Blossom Shanghai, right? So there was one line, they say that the New York Empire State Building is 381 meters high. They take a person 1 hour to climb up and only 8.8 seconds to reach the bottom in a free fall. So that's exactly what will happen in the stock market. So never be complacent about the stock market, or never be too sure about certain kind of investment. Like Nvidia, a lot of people was very sure, they are so positive about it, but they will also correct at a certain point of the time. And when a correction comes, you can be sure that the speed will be faster than the speed they climb up. Okay, so always fear about the market. And it's always better late than never. Just now, I mentioned at the beginning, I talked about the Dubai flood, right? And the Dubai is also learning their own license. Although they start late, but they are still building their sewage system now. And it's, I think, cost them $30 billion. And this is the thing they have to do. But although it takes time, complete by 2025, but they still have to do it, right? So if you haven't really structure your portfolio properly. Like you never prepare for flood happen. You think everything in your portfolio low, because I know some influencers, they encourage you to buy blue chip US technology companies, 100% load out. Everything is Microsoft, Google, Nvidia, Apple, everything is also like that. Then you probably need to have a backup plan. Yeah, because there will be one day that the sky will fall. You just don't know when. And the second point is that distinguish structural trend and the cyclical trends. So just now I talked about big trend, like AI is a structural trend, but there are certain things are cyclical trends. For example, the gold price, now because of the geopolitical tensions, they go up, but later tomorrow they are happy, they shake hand, the thing will maybe like go back. So it can be very short term, can be 2 to 3 months, can be 6 months, can be 1 year. So don't take it as a long-term trend. Don't say, oh, gold will go up forever from now until don't know when. I think it's a cyclical thing. Oil price also, maybe go up to $100, then later come back. So all these are cyclical trends. You need to watch for reversals. Watch for reversals. So distinguish structural trends and the cyclical trends. Oh, this is one thing that I want to just share. If you're my client, I was never bullish about Tesla. And I just don't like it for some reason. And of course, there are certain financial influencers, they were very bullish on Tesla, and then they make a huge reputation or name for it, right? And this is what happened. Tesla representing so-called the new energy people, new energy uh, sector, let's put it. Then ExxonMobil is the old school energy sector. So you can say Tesla is electricity, clean energy. By the way, electricity is not clean. ExxonMobil is the dirty bike guys, right? And of course, when the thing is going very well, it's like that lah. Okay, but you see now we can see this is Tesla have been down 50%. Well, ExxonMobil, this is for the 2 years ago and the 2 years later, right? From 2020 to 2022. So I intentionally do the cut point for you so you can see. Okay. So 2 years ago, 2 years later. In Chinese called 10年河东, 10年河西. Right. So things change. This I call the cyclical trend. There will be people who tell you buy this stock, hold for next 10 years, surely go up. There's no such thing. Sometimes things change, the whole story can turn the other way. So I think this is a very good way to look at cyclical trends. Okay, and this is my personal belief. I may be wrong. I may be wrong about it, but this is my personal belief. I think really AI is the biggest invention, and they will be like a revolutionary thing like the internet. Yeah, for the next 20 years, there's a theme that you can play with. And how you play moving to the higher level from infrastructure to applications to enablers. Okay. I think nowadays a lot of applications start to use AI already. Zoom, I already have an AI. I just upgrade my Samsung phone. My Samsung phone, I think the new version have some AI built in already. Very helpful if you have a Samsung phone, you can do an upgrade. When you text message other people, the AI can help you to make it a little bit nicer. Yeah, so I think it's very helpful. You should try that as well. So that is the applications already, and they will be enabled like in the future. I think from what I heard, now the biggest trend is healthcare. For the healthcare part, I think a lot of AIs is built in. It's a big thing because healthcare AI can really help a lot. It's so complicated and prone to human errors, but AI can come in, they can help them a lot. Okay, and it's not going to be a smooth ride. So if you look at this one, it's Amazon. A lot of times when people who teach stocks, they always use Amazon, Google as an example. Say, oh, you buy this stock, you hold for 20 years, you make how many times of this original price, right? Then they'll show you a chart like this. Wow, fabulous, from maybe a few dollars to $100 or $200. Okay, I want to show you just a snapshot for the first 10 years of Amazon. For the first 10 years of Amazon stock price is still at the same level from the dot-com bubble. So if you invest in the technology stocks, sometimes you'll be end up like that. Okay, and I would say most of the time you will be end up like that. So there will be a hype and a crash, and then for it to recover, they'll wait for 10 years. And how many 10 years do you really have? So don't be overconfident, don't be over complacent about certain particular investment ideas. Okay? And diversification is the solution. I always tell my clients, you need to have a portfolio with different asset classes to blend in. And sometimes can look very stupid, right? Because when you have, let's say, a diversification portfolio in the past 1 year, when all the US tech stocks have fly to the roof, you look very stupid. But you ask yourself in the long run, when the things goes south, right, are you able to take care? So I think in the long run, a good way of investing is still a proper diversified portfolio. But don't diversify for the sake of diversification, because I saw some people, especially some people's portfolio is like you have everything. Everything you can think about, you all have. Also doesn't really make sense because it become a diversification. So what you need to do is really go back to just now I shared with you, look at the trend. Look at the cyclical trend, look at the structural trend. If the thing is not on the trend, you need to maybe underweight a little bit. Don't buy so much. When I still remember very clearly during this period of time, in 2017 to 2019, okay, that's a time that I have a lot of struggle with my clients, also some people, because the REITs has been doing very well in the past, let's say 5 years. Okay, that's why so much so Singapore have so many REITs and people are still buying REITs today, because there was this thing called the IAE. I think that time they coined this name in Singapore. Because a lot of people say, I just buy REITs. I don't need to worry, always price performing, always doing very well every year. Why should I even invest in other things? So there are people who say 100% risk portfolio. There was even robo-advisors who come up with a portfolio to say 100% invest in REITs. And then look at what happened to the REITs in the past few years, right? Okay, they have been come down quite a lot. When it lost money, can be also very fast. So that is because of the structural trend have changed. And you need to realize that. You need to realize that. So when I tell people, maybe don't buy so much. If you trace back my article, you search a REITs in my blog. I write a couple of articles during this period of time. I highlight the REITs to people, right? So things do change. That is always my belief, and you just adapt to it. And that is why I say the rotation and look beyond the US stock market. The world always focus on global market. US market, of course, is doing very well, but nothing goes well forever. Even if they just stay flat, there could be opportunities in other places. So look beyond US market, and let's say, even Japan and India look quite promising nowadays as well. It's also an interesting thing to watch for. There are some drivers behind it, which I share with my regular FRM and clients as well, about all these drivers behind all these particular markets. So I won't repeat here. And so just to summarize, the strategy in the current market, which is quite volatile, I think the US tech shares just corrected in the past 2 weeks. If you look at the chart, it's like a go up. Then, of course, year to date go up, but I think almost go back to the beginning of the year, January, February level already. Yeah. So recognize there's a 3 geopolitical risks. Always watch for these 3 regions: US, China, which is the Taiwan side, Russia, Ukraine, and the Middle East. Okay. And distinguish between structural and the cyclical opportunities. So AI chips, by the way, in my opinion, is also a cyclical opportunities. Okay, so the chips, okay, need to be careful as well. Of course, can still go up in the long run, still got demand, but I'm not sure, how far they can stretch. Sometimes when the industry turn, they can turn very fast. And watch the commodity versus new energy as well. I think nowadays people start to realize new energy is not really new, it's not really clean. And there's a severe, I told many times, there's a severe underinvestment of traditional commodities. That's why during, if you remember, during Russia-Ukraine war, when the war started, the Europe has a shortage of energies. And that year I was in Germany. I still remember at night we were rationing about the heaters. You know, in the winter they were doing some rationing about the heaters to conserve the energy because there's a severe underinvestment of energy. And when something happens like Middle East, you know, Russia, this kind of energy big countries, something happens, intentionally or unintentionally, the energy will be affected. So watch out for that because there will be a imbalance of supply demand for energy sectors. So which is a very interesting sector to watch for. But I'm not saying it's all way up. You need to be very careful because energy will be very volatile in this year. This is my belief. Okay, understand what is the AI story and AI hypes, and also understand the tension between China and the US, which is always at a very interesting thin lines. I know on one side they are friends, on one side they are enemy, but the other side they are doing something together. So it's a very interesting. Do you know that even during the Russia so-called invade the Ukraine, Russia was, and the Europeans were supporting Ukraine to fight Russia, right? But at the same time, they're still buying oil from Russia until today. They're still buying. So everything is different from the surface under the underneath. Okay, the last thing is diversification, but not diversification. So look out how you diversify. I think now value rotation is a way to look at it. Trying not to enter high valuation stocks. Try to buy low value, relatively lower value stocks. And for the income investor, I know you have been suffering for the past few years. All the income instruments, be it bonds, REITs, high dividend stocks, whatever it is, has not been doing very well. So continue to focus on income. Focus on your income because income, that is what the income investor want. And if you do not eat the income, do not invest for income. Okay? Because it's very interesting. I see a lot of people, they are very young, like 30 years old, 40 years old, they say, hey, I want to invest for income because I want passive income. Then I want to invest like 50,000 into some income instruments. But what's the point, right? If you are not even spending the money, why do you even invest for income? So that is food for thought lah. So you need to do a proper investment planning before you just hear people say, you know, wow, passive income very good, financial freedom very good. When you haven't even accumulate a few $1,000,000, income investing is not something which is really benefiting in the long run. Of course, short-term wise, you can use it as a cushion or low volatility diversification of your portfolio. But you cannot say, you know, from 30 years old until you retire, always invest for income. It's very unlikely you have a sufficient financial wealth to retire because of that. Okay, so I hope that this is all useful for you. If you learn something, can you type one thing that you have learned today into the chat box? If you think this is useful for you, then you type yes into the chat box. Okay. And if we have a bit of time, then I will probably share a little bit about our FIRE retirement membership. I think there's some IFR member here. If you are IFR member, type me into the chat box. Okay. Some of you are not, then maybe I just share a little bit about what I do, maybe just 5 to 10 minutes. And if you're interested, you can drop us a message and I will will help you explain to you how does it work. Okay. So our IFR membership is an enabler. Basically, I want to help our FIRE retirement community to equip with financial knowledge and not just buy things blindly. Okay, even for my clients, I provide a lot of educations for them. So we provide online educations, then we host a lot of events online and offline. Okay, by the way, we have an upcoming webinar. I will share with you shortly about our upcoming webinar, so you can register later. Right. So we have a physical webinar, not physical webinar. We have a webinar today. We have one more next month. Where we just conclude our Wonka Mania game day. Okay. And this is our previous cash flow game. You know, this is our uh, uh, last year's gathering for IFRM members for FIRE retirement. And this one is the latest financial games that we have conducted to help everybody to have a better understanding about economy cycles. You can see this one is actually an economy cycle that we learn. I think everybody have quite a lot of fun with. I hear so much laughter in the events, right? And I will be having one more webinar next month. This one will be more technical. So this one is called the master funds and ETFs. Okay, because a lot of people invest in funds and ETFs, but they don't really understand it. And there's so much sales pitch along with investing funds and ETFs. So this is a master class. It's not a market update, right? So this is for education to teach you what are things you need to look out for funds and ETFs. Okay, what are the sales tactics financial salesmen use in order to ask you to buy certain things so they can have a high commission, discover all the myths and the pitfalls, right? And also we evaluate, I'll teach you how to look at the performance correctly, because a lot of times people, my client or members will ask me, hey, you know, someone promote me this particular fund, wow, looks very good. Can you help me to take a look? Then immediately I can tell them, okay, actually the presentation, the performance presentation to you is biased. So I explain to you how you look at it correctly, right? You can use it for your own investment. At least you can judge. You can make an informed decision. And also, how to use it for long-term and short-term strategies. Because it's not necessary to say you buy ETF is always buy and hold. ETF is actually a very good tool to use for tactical plays. So just now we're talking about energies, we talk about AIs, we talk about gold miners as well. All these, actually, the best way to invest them is through ETFs. Okay, so how to choose an ETF, how to select them, how to buy them. So this is the thing I will teach you. Okay, of course, which are the funds that good for long-term investing, I also share with you. So if you are my clients, then you will have an aha moment to say, oh, why I even have recommend me for this one last time. Then suddenly you maybe have a realization about it as well. And also I will share with you my selection approach as well. Okay, so this webinar, if you are IFR members, it's free for you. Okay, it's free for you. And if you are not an IFR member, you can still join. It's a paid event. But because you attend today, because you take actions, you get a 50% discount. Okay, so you use a code FIRE50. I think our team have put out the link into the chat box. You can scan the QR code as well, and you can join for the webinar as well. But if your FM members do not sign up today, I will send you a separate link to join, so you don't need to pay for it. Okay, yeah. And then lastly, I also talk about a little bit about our FIRE retirement membership. And if you are interested, because I don't have much time to share today, sign up this interest form, and we'll send you the information. You can take a look whether it's something that is beneficial for you. Of course, our staff will also advise you whether it's suitable for you or not. So there's two QR code here. On the left is for the webinar. On the right is for the
今は、ヤクルト1000が4本ぐらい入って、
okay, on the right is for the membership interest form. So it's just an interest form, okay? It's not for sign up. Yeah, so you can click on the link. It's a Google form. You just say, okay, I'm interested. Please send me the information. Then our team will send you the information so you can take a look. So that's if you have any question, you also can clarify with our team. Right. Okay. So any questions before we close for today's event? Okay. Thank you, Ravi, for your comment. Very good summary for current world economics. Right. Okay. If you okay, a lot of you have replied. Okay, very good. Okay, so if you have find today's webinar is useful, okay, tap useful into the chat box. Yeah, so at least I know it has been helpful for you. I'm happy if you have any feedback. Just drop me an email. I think all of you have my email. I've sent the webinar email to you. You can always send me an email. Whatever question you have, I'm glad to help. Yeah. So, as I said at the beginning, my goal to organize these activities is really to help you uncover the truth and have some unbiased view, and hope you can benefit for your retirement, benefit for your well-beings. Okay, good, good, good. Yeah. Any questions pertaining to this webinar at all? Yeah. If not, I think we can call it a day. Then I will leave this site here for another couple of minutes for those people who need to sign up the webinar or submit the interest. And I will see you next month. Right? Okay. See you soon. Okay. Bye-bye. Good night.
Recording stopped.